What's going on, guys? Today we'll be talking about Aurora, and unfortunately today we won't be giving any good news on this company because we will be talking about how an analyst has given Aurora a $0 price target. Yes, that's right, a $0 price target, and they're pretty much saying that this company is worthless. We're going to cover all these points, and at the end of this video, I'm going to tell you whether I disagree or agree with this analyst. We'll also be doing some chart and technical analysis, and I'll be catching you guys up on some news. We'll be looking at a video from Yahoo. Lots of things going on in this video, but before we get this video started, don't forget, give me a quick thumbs up, and if you're new to this channel, don't forget to hit that notification bell, smash that subscribe button, and leave me some comments down in the comment section. Let me know what you guys think about Aurora. Do you think this company is really going down to zero? What do you guys think about this analyst and what they're saying about Aurora? But for now, let's get this video started. So first things first, let's be looking at Aurora charts real quick. Right now, we're going to be looking at the Canadian charts. And as you can see, right now it looks really messy right here. We have the red, we have the green lines right here. These are support lines. And we're currently sitting at this support line right here, which is currently at $3 Canadian. So we're actually a little bit below the support line. So we're going to see whether it bounces off the support line or whether it goes even lower to this other support line that I've drawn at around $2 Canadian. The reason why I have these support lines right here is because pretty much in the past, Aurora has used this line right here at the bottom, this $2 as a support and this $3 as a resistance line. And of course, as you can see recently, we're going to zoom in a little. We're going to look at 1 hour charts. As you can see recently, Aurora has used this $3 line as a support and has bounced off it, and now we're currently hitting it, actually gone a little bit below it right now. So we're going to extend this line all the way here. So currently right now we're hitting the support line. We're also going to be looking at American charts real quick. It's almost the same thing. We have a support line right here at around $2. I'm going to say $2.15. I'm going to extend this line because Aurora has pretty much bounced off it twice. So we have a $2.15 support line for Aurora right now, and we seem to be bouncing off it. And according to this analyst, we're going to be breaking way below it and hitting $0. Now, before we get into this article, I'm going to be playing a quick clip from Yahoo, where these people will be talking about this price target, and I'm going to pretty much give you guys my thoughts, my opinions throughout the video.
All right, well, one space that is almost just as hot contested, to be quite honest with you, is the cannabis space. And today we're watching Aurora Cannabis, and the stock is plummeting today, now down about 8% after a GLJ research analyst initiated his coverage of the company with a $0 price target and a sell rating. The analyst says he believes Aurora's equity holds no value, and it's facing a liquidity crunch, potentially running out of cash come July.
So let's not forget, this has happened in the past with Afria, where Afria was also given a $0 price target. And did Afria ever hit $0? It never happened, but there was some serious allegations against Afria, and they were given a $0 price target. And I believe a lot of people made money, including myself, during that time, because when Afria was plummeting, I was buying shares. And right now, after today's news, Aurora is down. Well, now they're only down 5.74%. At this time, they were down 8.26%. And maybe this article was written to create a buying opportunity. Maybe shorts are attacking Aurora right now, so this is their way of manipulating the market in a way. I'm not saying this is exactly what's happening, but this scenario has happened before, where a company in the MJ sector has been attacked and been given a $0 price target.
That's problematic for a number of reasons there, Jack. I mean, we've covered the cannabis space here. No doubt 2019 has been a tough year, but saying that a company is going to run out of money by July is not a good thing. And it's definitely not as well capitalized as its competitor, Canopy Growth, sitting on $2 billion American, whereas Aurora does only have about $150 million in the bank.
That's also a very big factor. Canopy Growth, Kronos Group, both those companies have billions of dollars in the bank right now, mostly because they landed those partnerships. Aurora, according to this video, they said they have about $150 million in the bank and a lot more debt versus the money they have. So right now, Aurora is in debt. Imagine Aurora landed that deal. Cash would not be a problem. That seems to be one of Aurora's biggest problems right now, is the amount of cash they have, being profitable and making all that cash back that they seem to be borrowing. Aurora keeps piling up the debt. On top of that, Aurora keeps issuing more shares, which is diluting even more shares, which is punishing us, the shareholders. So how is Aurora going to raise even more cash without landing a partner. I don't think Aurora will be able to at this present point right now. Right now, I don't think Aurora can land that $5 billion Constellation deal the way Canopy did, mostly because of the price they're at now. When Canopy landed that deal, that was when there was a lot of hype around the sector. Right now, a lot of people are scared. A lot of investors are questioning the sector. So it's going to be very hard for Aurora to get that cash unless they decide to issue more shares, which shareholders don't want to see that. So Aurora is kind of in a tough situation right now. But let's continue.
It is scary. You know, when the cannabis boom first started, I thought these companies were going to be piling and just having stockpiles of cash. But they're having trouble, man, because it's so expensive. You have to invest, you know, in your growth. You got to invest in all these facilities. And competition is coming up. And if you look across the board, I have a couple of friends that are a part of both of the largest companies, and you see what they're trying to do. They're scrambling. They're scrambling to open enough facilities. They're scrambling to be able to take enough oil and contract it out of these plants. So there's a lot of issues that still have to go on. This industry needs time to develop.
And a lot of people
have to understand.
And I mean, this analyst kind of pointing out that some companies might not have that time.
So I kind of want to look at this chart right here, and there's a huge difference right here. Right here we have Cronos, Canopy, which are the two companies that have landed those billion-dollar deals. And you can see the difference. Cronos and Canopy, they're kind of like right here, the purple, the blue. The purple is Aurora, the blue is Cronos, and then the yellow orange is Canopy. And as you can see, Cronos and Canopy have almost always been above Aurora. Aurora did have their little peak moments right here, maybe right here and there. But right now, if we're looking here, present day December, you could see Cronos and Canopy way up there and Aurora all the way down here. And I feel like a partnership is playing a big part in that role, mostly because these two companies have a lot of cash backing them up right now. And the only thing Aurora has is a lot of debt and a lot of shareholders who are probably going to be punished even more because to me, I don't think Aurora has any more options beside issuing more shares and diluting even more shares, which is really bad news for investors, which also makes me really glad that I collected profits when I did. Aurora has been a really good company to me. I've got pretty lucky doing my swing trades with Aurora Cannabis. I'm still holding a small amount of shares, and I'm actually very grateful and thankful that I collected all the profits that I did, and I'm holding a small position. Times like this, it makes me think whether I want to step into this company and start purchasing more shares because they're so cheap right now. But when news like this comes out, it makes me wonder how low will it go? Because I'm not scared that this company is going to go to zero because I personally don't believe that this company will go to zero. But I do think that some people will be scared and will be pulling out more money, and it could drive the company even lower, which will create an even better buying opportunity for me. When will I buy some more Aurora shares? I'm not sure. But when I do decide to, I will be sure to update you guys right away.
Because as we talk about it, I mean, the Safe Banking Act was passed in the House, still waiting in the Senate. But that's one of those bills that's kind of addressing the heart of the problem where these companies, it's hard to raise money if you're a cannabis company. And it's also hard to manage all the cash you're getting from people buying your products because you can't actually use what a traditional bank, you can't use it like a traditional company would. So, I mean, that clearly, I guess, being a headwind unless it gets solved moving forward into 2020.
I mean, just one of the many headwinds. I mean, Jack's right. Cannabis stocks are literally almost the definition of the long game. I mean, we talk a lot, obviously, there's a lot of stocks that people need to hold for quite a bit of time, but cannabis stocks, absolutely. When you want to talk about headwinds, there's the regulatory hurdles that you have facing here in the United States. And that's just not even the banking industry, that's also the legality around recreational marijuana use, CBD, if you can even use that in foods, like that's not fully regulated yet by the FDA. Then you also have the black market still continuing to completely undercut in those areas where recreational marijuana is able to be legally bought. Then you also have the products, there's not enough stores. So that they have a backlog in some areas of some of their products that they are able to sell. I mean, the headwinds just keep piling on and they just keep spending more cash to position themselves for when all of those floodgates do eventually.
But eventually, if you do hit a
which I do agree 100%. Right now, all these companies are spending a lot of cash and literally they're just doing it to position themselves for the future. Right now, there's a lot of obstacles in the way, a lot of them being like Health Canada. One of them that they mentioned, not enough stores. For example, here in Toronto, there's not enough stores for being one of the biggest populations in Canada for them to have almost the least amount of stores. It just doesn't make sense to me. So there's a lot of obstacles in the way. Right now, it's only been a year. It's been a little bit over a year since this industry has started. So it's still a very young industry. So we're going to see a lot of growing pains. Let's continue with the video.
A liquidity crunch, then there's a problem there. But there is also kind of that aspect. If you are saying hold on for the long run here, that is one of those things where it's like we try and warn people who watch the show, investors across the board, don't put all your eggs into one basket and don't do it all at once, because if you do have this, you're caught in that weird position, uncomfortable position of, all right, maybe I just eat my losses here because who knows where it could go from here. And that's why we always try and warn. It's fitting that it follows crypto. Don't gamble with more than you're actually comfortable losing.
Analysts always say, listen, if you're going to be putting your money in this area, you have to be prepared to hold on to it for quite a bit of time.
No, for sure. All right. Well, there you go. Cannabis and crypto, both very interesting sectors, both ones that are potentially coming into some problems here as we wrap up 2019.
So there you have it. That's it for that video. And on top of that, we do have an article right here, which pretty much explains why this analyst is saying that Aurora will go to zero. I'm going to try to skim past it as quick as possible. So down more than 52% over the past 52 weeks. Could Canadian MJ giant Aurora go to zero? So one analyst thinks so, which is a firm founder, Gordon Johnson of GLG Research, announced he was initiating coverage of Aurora stock with a sell rating, arguing that ACB's equity holds no value. He predicted Aurora stock will become utterly worthless by the end of 2021, and so proceeded to assign a 2-year price target of $0. We're going to look at Johnson's track record. Apparently, this guy was only given like a 1.5 star. Right here, we can see Gordon Johnson, 1.5 stars, ranks 4,016 out of 5,757 analysts. So this isn't an analyst that has a very high reputation. This isn't a 5-star analyst that gets things bang on. I don't think any analyst gets things bang on. But at the end of the day, it's like you're getting an article of an analyst who has 1.5 stars giving Aurora a 2-year zero price target. So that takes a lot of credit away from him, just that alone. So how does Johnson back up this bold claim? He does it with numbers, lots and lots of numbers, mostly relating to arcane subjects such as rising debt. ACB's recently added $160 million to its existing $200 million credit facility with BMO and restrictive covenants on that debt, which Aurora may be at risk of violating. This debt carries a number of restrictive covenants that go into effect on September 30th, 2020. So Aurora is a company loaded down with debt that its bankers will eventually want to have repaid. Over the last 2 years, total corporate debt at the company has exploded from just $64 million to $796 million. Now, admittedly, debt can and often is rolled over by taking out new loans to pay off the old. However, in Aurora's case, lenders have told the company it needs to be making enough money by the end of Q3 2020 that its debt will be no more than 4 times its earnings before interest, taxes, depreciation, and amortization, which is EBITDA. Problem is, Aurora currently has a negative EBITDA, and unless it starts earning some money pretty soon, it will be in violation of its debt agreements, and its bankers can call in its loans. So, well, if that does happen, could Aurora perhaps issue and sell some shares to raise the cash it needs again? Perhaps it can do that. In fact, Aurora has been issuing and selling quite a lot of shares. From 2016 to now, ACB shares outstanding have advanced from 183.6 million to 1.023 billion. The company has literally quintupled its share float, diluting its existing shareholders in the process. But the farther its share prices fall, the less money it gets for issuing new shares. And again, the share price has already fallen 52%. So even if Aurora does issue more shares, they will be issuing the shares at a lesser value because the share value is a lot less than it was a year ago. While it's true that the company's plans to continue dilution via incremental equity issuance, it's getting less and less money for the shares it sells, even as it dilutes its early backers with each new share issued. Of course, there's always the chance that Aurora will be able to do what it should have been doing in the first place, which is earning profits instead of financing itself with borrowings and share sales. But here again, Johnson raises an objection. In 2020, there's going to be about 3 million kilograms of MJ produced in Canada to satisfy a demand for 1.06 million kilograms. That's a recipe for oversupply, falling prices, and falling profits. or more precisely, continued losses at Aurora. So all in all, the market's current view on Aurora stock is a mixed bag, indicating uncertainty as to its prospects. The stock has a hold analyst consensus rating with 4 recent buy ratings. This is versus 3 hold and 3 sell ratings. However, the $4.04 price target suggests an upside potential of 60% from the current share price. So there you have it. Aurora has a $0 price target, but that's just by one analyst. There's still four other analysts giving Aurora a buy rating, and there's still a price target for $4.04, which I do think is still pretty low. And even though it is a 50% upside, at the end of the day, I don't think Aurora will ever reach $0. I just think that's impossible. There's too much money put into this company. There's too many investors willing to back this company up. This is one of the biggest MJ companies in Canada. I don't think one of the biggest MJ company is going to be the one to go to zero. Of course, I do think a lot of these companies are going to eventually disappear and fail, but I don't think Aurora is going to be one of those companies. But maybe that could just be my faith in the company, or maybe because I've grown to love this company over time. It is one of my favorite MJ companies. So do I think Aurora is going to zero? Absolutely not. Do I think Aurora could go even lower? After this article, yes, because news does drive these companies. They either bring it down or push it up. And unfortunately, this is very negative news that I do think will bring the company down even lower. But at the end of the day, I do think this will just create another buying opportunity. If I see Aurora go below $2, I will most likely be continuing to add to my position and average down. But as of now, let me know your guys' opinions. What do you guys think about this article? What do you guys think about this $0 price target? Do you think that's realistic or unrealistic? But if you guys enjoyed this video, don't forget, give me a thumbs up, hit that notification if you're new here, and smash that subscribe button. And that's it for now, guys. Bye-bye.